Hey David,
Hello, how's things? How is everyone?
yeah, all good. Thanks for the information, the feedback on my chart.
Oh, no problem, no problem. Happy to help.
I have a quick question. Can I ask right now?
Yeah, yeah, go on ahead.
Yeah, I see you are more conservative with your entries. So when it comes to, for example, for example, passing a challenge funding account, if we hit for two losses and we never get a trade for almost 20 days, and we, my question is how often we will be getting really valid trades because. Sometimes risk entry is always needed, right? So in your last 30 days, how many trades did you take?
The
In
last
your,
3 days, I think it took five or six, but it took two this week.
okay, fine, fine, fine.
I think it took a couple last week, and then I think
Yeah,
it went at one stage. I think it went 2 weeks. So I take them on, but I think it's about five or six off the top of my head. But it's like, Lord, it's like you can't control the markets. It's like the markets move in cycles. There's good periods, there's bad periods. It's like you just have to accept it. Like if you decide to do a challenge and it's a bad month like that, that's just bad luck. It's like you might have to be more aggressive coming towards the end of it to try and get over the line or whatever.
all right.
But like, that's pretty. It's like one thing I don't recommend is changing how you trade. Just try and pass a challenge. It's sort of it should be a byproduct of your processes as opposed to an individual goal, if that makes sense. But I understand, like if you're in a couple of percent drawdown or whatever, and you want to get a free retry or whatever, it's like then yeah, you might want to be more aggressive because you have nothing to lose at that point. But
Yeah, got it. Thank you.
no problem at all. So we'll just give it another minute or so, guys, and then I'll kick off. I'll do EU and AU, and then Tomas will jump in and he'll do DAX. So and then we'll do general Q&A after that.
Hey guys,
Tomas, how's things?
how are you doing?
Good, good, good.
Very well.
So I'll kick off then. It's 3 minutes past. I'll just share my screen. Can everyone see that okay?
Yeah, perfect.
Okay, so I'll start with EU. I'll only cover today's price action in EU because I know Matt covered Monday and Tuesdays last night, so there's no point in me regurgitating what he said. So obviously with the daily, we were bearish and we've had the pullback into this supply. So it's very possible that basically we had like a bullish chalk eye boss there, whatever you want to call it, but it's very likely that the chalk was only to mitigate the supply and the premium. As you can see, this sort of pullback here didn't quite make it, and then we failed to close below the low and then pull back to mitigate the EQ. So it's very likely the pullback's complete and we're going to run the week low at this point. For the last few days, we were pausing in this little flip zone here. It's a flip zone because it reacted to that inside bar and then the reaction failed. So we were obviously pausing here and it remained to be seen how deep a pullback we would get, or would we just tank and run the low. But you can see now basically the reaction, it looks like it's going to be a failed reaction if we get the close below today, but it's very likely that demand's failed at this point. So on the 4 hour then, the 4 hour was bullish, so it was counter trend to the daily. But we know that it's possible the 4 hour only switch bullish to mitigate the daily supply. So we're not absolutely welded to our bullish bias, and we understand that the supply ranges here, the internal is currently bearish, that they can be respected and that we can run this low as although this is a strong low on the 4 hour as it caused this bullish break of structure, it's weak on the daily as it didn't cause anything significant on the daily. So yeah, you can see we've come into this little supply or demand, sorry, at the extreme. This is likely the last point they'll have to hold if the bullish trend is going to sustain. So it was very possible we could see a decent bullish reaction from here, maybe just up to mitigate something within this previous range before we go. But yeah, sort of buys made sense, sells make sense. Just sort of knowing, understand that yes, the 4 hours bullish, internal is bearish, daily's bearish, so it's possible the internal ranges could hold. So sort of just using that sort of to stay nimble in the M15 as opposed to being welded to a bias in either direction. So yeah, that's the daily. We pretty much just tanked during London and then came into this here. It's a demand coming in New York, so remaining to see what sort of reaction we get from there. On the M15 then, see we had this huge sell-off this morning just before London had the sweep of liquidity, and then just an astronomical sell-off thanks to Mr. Putin giving his speech threatening us all. But yeah, the larger internal is bearish for me because that's the sort of most recent significant sway internal range. So this is my strong internal high. You can see we come into the M15. It's a nice clean inside bar. See it there within the 4 hour. So it's obvious, it makes sense why we got the reaction from there. There was a potential entry within here this morning, or sorry, there wasn't a potential entry. I was waiting on sort of the CMM1 POI that Matt covered in his markup, but obviously it wasn't hit. And then you can see we pushed up, we had this little range, which again, this is like the smaller internal structure. So understand that this may just be to put in the pullback, but they can still hold. So we pull back, we mitigated this sort of inside bar. It's not quite, we didn't quite mitigate the premium, the swing leg, but we did mitigate the premium of the internal leg. So it's possible the pullback is complete. And then we're sort of mitigated this here. I think that, yeah, this was all during the London lull. So coming into New York, I was looking at potentially, because we hadn't had a bullish chalk running yet, this was quite aggressive, but I was looking to see if we potentially pull in here and give us a nice entry model just to play the continuation of the next, the next bullish leg to the upside, sort of in anticipation of maybe mitigating the EQ or this range here. So I was happy to look for buys in there, but nothing set up as I will show you. And then towards the end of the session, you can see the range failed. We've got a sweep liquidity, a bullish eye chalk, because obviously we haven't had a bullish chalk yet. So this is all like internal of the internal, or whatever, internal of the fractal, or whatever you want to call it. So it was valid to look for a buy within here. There was a potential entry that I'll show you. I didn't take it personally. But yeah, there was no buys here, as I'll show you in the M1. And then there was sort of, I was looking for buys down here, even though we had no M1 shock, but I'll show you this in the M1 now. So yeah, obviously on the M1, you can see, come in this M15 demand, got a decent reaction, then you can see we start sort of making higher highs and higher lows. This was the POI that I was sort of waiting on to be hit for a potential confirmation entry, but price didn't come down this far, unfortunately. Again, it's more aggressive doing this because you haven't had an M15 shock running, but you can see price is sort of making higher highs and higher lows in the M1, so it was valid, but obviously didn't get there. Wasn't interested in any sells within here. It was during the London lull. You can see there was a bearish chalk there, but that's just about as aggressive as the entry model gets because there was no inducement on the M15 or the M1. So ideally, that's when you want to see like the clear liquidation of either a high that caused something, like a high that caused a chalk, or sort of clear equal highs like that there, your picture perfect entry model. You can see you got a pretty corrective move away, so at this point there's no way I would be looking for an entry, but this did end up holding. Again, we understand why it held as M15 supply, but it's not really something I'd leave an entry on because you can just see how corrective the move down was. Then see, this was the M15 supply that was potentially demand, that was potentially looking for a buy from. You can see they're sort of pushing down, the supply ranges are being respected the whole way. So I was sort of cautious about trading directly against those, bearing in mind that everything was still heavily bearish on the M15 and 4 hour, etc. There was no entry model for me. You can see we come in here, technically got a chalk, but again, very minor liquidation. Yes, got the V shape, no flip, just an aggressive entry model. And then you can see before we came back to the entry on it, we mitigated this prior range literally to the pip. The low of that candle is 187. The high of that candle is 187. So it literally mitigated it to the pip. And that's why we always say you don't really want to be trading against any clear ranges. Like ideally, you sort of want to get in, get your entry here and then get to break even before you mitigate the range. So then if it keeps tanking, you just take a break even and not a loss. Again here, mitigated sort of refined zone within it. Yes, technically you get a chalk at that inside bar, but again, no, that's a clear liquidation. But it's just not really an entry model I would take. And then again, come down here. Yes, technically get the chalk, but again, mitigated this range. So ideally, you want to be able to get to break even before the range, or you want to wait for the range to fail before looking for longs. So there's no buys there for me. Again, technically, yes, you got chalks, so technically there is an entry, but it's like you have to ask yourself, is it an area in which you want to be super aggressive? And it's like you look at everything, it's like you're trading counter to everything, so it's not really an area to be aggressive. Here we had the iChalk, so we had this fresh demand. So then you can see mitigated sort of the refined zone here. Is it a decent POI because obviously it flipped this here. Had a pretty decent sweep, V shape, little reaction, and then it closed above. So technically that was a flip. So you could have entered there. The extreme was mitigated, I believe. So the high of that is 0.39 and the low of that is 0.39. Yeah. So technically the extreme was mitigated. So obviously the flip didn't sweep, so you could have entered there. Obviously that would have been a loss. If you entered on the extreme, you probably would have stayed in. And possibly taking a break even or a loss, depending on how you manage before we swept this here. But again, it's like you want to pick your spots in trading when everything's aligned. And it's like this is so heavily counter trend. It's like you're trading against basically everything on the M15, the 4 hour internal, the daily, etc. And then we understand that yes, while the 4 hours bullish, the strong 4 hour low is weak in the daily. So it's just not really a spot to be aggressive at buys because you are ultimately expecting more downside. But yeah, that's EU. There was potentially some opportunities this afternoon, but not really anything that I would want to risk my capital on. And then yeah, it remains to be seen what happens from here. We could still push up and maybe mitigate something in here, but we could equally just tank and run the weak internal low. So yeah, that's it. EU. Does anyone have any questions about EU today, or?
No questions, I think, mate.
No, that's okay. I'll crack on with AU then. I'll do sort of an overview of the week, not going too in depth in the M15 run. And I took a trade on Tuesday morning, so I'll sort of cover it a bit in depth and then just go through today's price action. So obviously on the daily, it's bearish. We had so far failed to close below this low. So in theory, we could have seen a more complex pullback here, maybe even a bullish trend change, but obviously a lot has to happen for that to play out. So you can see all that happened was we got the sweep, but then we just pulled back into this little flip zone here. And it's a flip zone because you can see it clearly reacted to this demand. This demand caused the bullish chalk, which was there. So yeah, valid flip zone. So quite often in the daily, you don't get, you can just see like the mitigations. It's obviously far clearer in the 4 hour and the M15, but the mitigations are happening constantly. Like, it's just little, you're dropping down, pulling back in. So yes, it's not the clearest POI, but it makes sense that price will just want to pull back in and mitigate that and then continue lower. So yeah, now it looks as though, depending on how we close, and I know FOMC is happening, so it could literally go anyway, but we might get the close below the swing low, which is here, which would obviously give us this new bearish range to trade within. But yeah, that's sort of the daily, obviously expecting the week low to be run sooner or later. On the 4 hour then, see we're bearish as well. This was the most recent bearish break structure, so this is our swing high. I counted these as, well, that's obviously an internal because that's in the swing range, but I just counted this as internal structure because even you could kind of just swing if you want, but the way I sort of was thinking is if this high, like say price does come up and close above here and then starts this here, it's like, do I think the 4 hour is bullish and we're going to go to the moon? No, it's like it's most likely just to mitigate like this supply or at the EQ, or the even better that at the premium. So because obviously we've had the break structure and we haven't mitigated the EQ yet, which we usually eventually expect to happen. So obviously internal swing both bearish, so sells are high probability. We got the bearish IBOS during Asia send this morning. It wasn't really best value for sales at this point, but we could have just pulled into this refined 4-hour pivot or the range and then just continue lower. But then equally, if we got signs of bullish intent in the M15, like a bullish IBOS, whatever, I would have been happy to take long, sort of in anticipation of playing the sort of decent pullback to at least the EQ of the internal range, if not potentially the swing range. So that's AU. It's just been trickling down all week. But internal and swing are both bearish in the 4-hour. So then on the M15, on Monday, there was a potential trade. I'll use bar replay just to make this clear. Obviously, had the bearish break or had the bullish break of structure here. So that's the M15 switch bullish. So this was basically all the M15 pullback. So obviously, the expectation always is that a lower high or higher low is going to form, and then we're going to continue higher. So sort of during London, we were just sort of trickling down. We came into this POI here. Decent POI led to this sort of IBOS, whatever you want to call it, had inducement. So you could have looked for an entry then there. I don't think it's on clean in the M1. I'll check now. Yeah, there was some entries there, but I think I said, yeah, potentially some entries here within the mitigation of M15 demand, but again, they're completely valid. It's like you get the sweep of the equal lows, that's clear liquidation. I think the big issue here was that we had mitigated M15 supply before the entries were tagged, which is obviously one of the main things you want to avoid. Yeah. Basically, you had all these like little supply zones here, and again, there's nothing massively clear, but they're not something you want to be trading against. Just to illustrate this in the M1. Yeah, so at the time I was basically waiting for the supply to fail just to signal that basically the internal likely changed, because you can see there you're literally just trading when you're taking these. Yes, they can play out, but you're literally just trading directly against the M15 supply, which as the internal is bearish, like that can just hold, as it ultimately did, and push lower. So ideally you wanted to see the supply fail before looking for longs. That's the way I was viewing it on it, but then I am more conservative. So yeah, that was London. Again, potential entries, nothing I want to take myself. And then coming into New York, you can see the extreme wick of the sweep zone held. We got the bullish M15 shock, which is exactly what you want to see, because again, you can see we pull back into that supply failed, put in a new low, and then supply failed. So that is exactly what you want to see. You want to see supply fail. So then I was potentially looking for a buy within here. I just wasn't on the desk whenever it's set up, so I didn't get involved, but it was valid. Again, pretty clean entry model. Mitigation M15 POI, liquidation of that low. You got the chalk. This candle mitigated this sort of range, and here you can see we had the flip. It reacted to the wicks. So yeah, V shape out, and then pull a corrective pull back in, built a bit of inducement in front of it. Again, not the best, but yeah, it was more than valid. I just wasn't at the desk time, otherwise I probably would have taken it, and it would have been a loss for me most likely, as I partial at 4-1 and it didn't reach 4-1, but you might have been lucky enough to get away with the break even there. But yeah, nice trade, more than valid. Then Tuesday morning, took a loss. So you can see M15's bullish. That's your break of structure, but then we had like a bearish IBOS here, and then sort of the whole way coming down, sort of supply is being respected. So the loss I took was within this supply. Yeah, I'm more than happy with the trade. Like so it was this supply here. You can see it's more than valid. It led to this bearish IBOS. This range was mitigated, obviously. The refined pivot wasn't, but quite often we see ranges being respected. You know, if the range is mitigated and you're also waiting for the extreme, you're going to miss a lot of trades. So yeah, the one main negative confluence is this is basically your order flow counter trend pullback. So the one thing that sort of I had in my mind was that we've mitigated the EQ of the leg, so it was possible that the pullback was complete and that we will continue bullish. But the way I approached it was had you know, like, I knew these ranges could keep being respected. Yes, we mitigated the EQ, but had a pretty clean POI. So my attitude was, if the entry model set up, I would take it. And it was a pretty clean entry model, to be honest. Like this is just about as clean as entry models come. We mitigated basically, this was like a 15S refinement. You can see we had these highs in front of it, so nice inducement. Had the liquidation, which again is beautiful because this high caused the chalk there. So that is like your purest liquidation. And then, so you have people basically selling here because we got the bearish chalk, and then basically they get stopped out whenever price sweeps the high. So that's exactly what you want to see. You can see V-shape up, pull down, bit of a reaction, and then more momentum down. So that's your flip. The flip is actually, it's only wicks, but it's definitely there. So all the criteria is met there: mitigation, liquidation, V-shape, flip, chalk. So like, I was more than happy to risk my capital because the entry model was clean. Didn't quite get to break even, and then basically got stopped out because price, I think, literally mitigated. It was like the last point. Yeah, I think it was literally that wick. It mitigated the last point, but the last point that had to hold for the internal order flow to continue. But yeah, I'm more than happy with the trade. You know, whenever you're not sure, whenever it's not the highest probability, I also, you know, wait for all the entry model criteria to be met. And in this case it was, so I'm more than happy to take the risk there. You can see we just held at the extreme and then continued bearish. So the thing to note here is that basically the ranges are being respected the whole way down. So this is the power of the new internal structure concepts, is that even though the M15 is bullish here, we understand that these ranges can hold and eventually switch bearish, so we can still take advantage of the pullback quite confidently. Personally, I didn't get involved in New York. Obviously reacted to that demand, got a bit of a shock, but don't think there was any. Yeah, obviously, again, we got the bullish chalk here, but it was only to mitigate basically this supply within the previous range. So that's where chalks can give a lot of false signals, and if you're sort of putting a lot of faith in them in the wrong areas, you're going to take a lot of losses. I'll just drop down the M1. I don't think there's on them. Yeah, there was no trades for me within here, but there was a few potential entries. Like, we mitigated this supply. Wasn't the biggest fan of it because obviously it was technically a weak leg as price had failed. Price had failed to close below. No, sorry, it was on a strong leg. Sorry, that's just me wrong. Yeah, it's more than valid to look for sell there. It's the POI led directly to the bearish IBOS, so yeah, more than valid. I don't think it was an entry model set up that I particularly liked. Yeah, there was very aggressive buy during the London lull from the demand that caused the chalk. You can see it's pretty aggressive. Like, it's completely valid, but you can see you get the chalk, and then we got the flip here, and yeah, he would have got tagged in, would have been a nice trade, but it was during the London lull, and I don't trade during the London lull. So see here, there's a few entries, mitigated the M15 supply, obviously no inducement even in the M1. So yes, technically you had the liquidation of those equal highs, but again, the highs didn't achieve on them, which is something that I'm sort of keeping more of an eye on. I don't have any solid data or any solid rules for it yet, but when the high didn't achieve on it, it's quite often a false move. And you can see in this case, we got the chalk and then the high got smashed and mitigated beautiful refined M1 POI within there. But then obviously the chalk line was down here. So there's no entry model there. And then again, there was an M15 POI there that wasn't even worth trading, to be honest. Yeah, it was this one here. But again, it's a weak leg because price failed to close above the low there. So when price failed to close above the low, the pullback could be complete and the weak high be run. So I was personally happy enough to leave that. But again, there was no entry model anyway. And coming into today, so just rewind it to the pre-session. So obviously coming into session, we had a bearish boss, so the supply range is held, and the M15 ended up switching bearish when we got a close below that low. So it's potentially waiting to see what happened with this supply, because obviously this is the supply that led to the break structure. So I was waiting to see if we got a sort of a nice flip and then a chalk, and then to potentially look for longs. But again, I think Mr. Putin's speech just messed everything up, where it just completely tanked, and the volatility was high thereafter. There was placed an order on an entry, but I'll show it wasn't tagged. I'll show it to you now. And then there was a risk entry that potentially played out as well. So you can see you had this risk entry. It was within the PY, basically that caused the price to take out the low. Again, no inducement in front of it. And then you can see straight down. Well, granted, yes, we did build inducement there, but there was no inducement in the leg. So again, it makes sense why it held, but just with the uptick in volatility because of Putin, I wouldn't personally have confidence to leave a risk entry there. But price progressed on anyway, and we had this M15 supply. I believe I had it refined to the wick. Yeah, so the entry model was pretty clean. You can see we had the M1 PY within the M15. You know, swap liquidity, it mitigated this here. It's very nice M1 PY. You can see we had the reaction where price was sort of stalling there, but then we got to close below, such a failed reaction, your flip, and then entered on the extreme. I think I went with a 2.5 pip stop and still wasn't tagged. The extreme wasn't hit. So yeah, a nice setup. Aggressive to be selling low on the leg, but you know, when the entry models are clean and sort of you're at the extreme of the protected internal leg, you know, we never know how far price can keep tanking. You know, we always anticipate a pullback, but it can keep selling off. So it's only 1 hour at the end of the day. And yeah, coming into New York pretty much it's just a mess. Obviously we've mitigated the supply, and then it looked like the reaction was failing, so it looked like we're going to push higher, but then pretty much just range bound in the internal range. Yeah, I was happy enough, to be honest, just to wait for price to break out either way. Ideally the upside to maybe play the pullback, but or to the downside and see what sort of happened. But pretty typical of the price action coming into a news announcement, and that it's pretty much just gone nowhere. It's just range side to side. So yeah, this is the exact sort of price action that you just want to leave alone and don't even bother looking for an entry. So yeah, that's AU. Does anyone have any questions sort of this week's price action or anything that was covered within it, or will I hand it over to Thomas and let him show us the DAX magic?
Hi, David.
Hello, how are you?
Hello, I'm good, thank you. I'm really sorry, I've got a question on EU. My son was screaming in the background and I didn't want to ask at the time. So do you mind if I ask on EU now?
Yeah, no bother, go on ahead.
If I've got the same markup as yourself, I wanted to see a chalk above the last bullish candle in the big push down. So where your red line is,
yeah.
I wanted to see at least a chalk for me to play along. Would you still be confident that if we had a chalk above that red line, would you then look for longs, or would you be steering clear of this because we are extremely bearish across the time frames?
Yeah, Lord, if you got the chalk, yeah, I would look for longs. But then the big question with the chalk always is, what do you mitigate before coming back to PY? So like say we could say get a chalk, but in the same candle we might mitigate this here.
Yeah.
And in that case, it's likely that the chalk was only usually a chalk is only a sign of like an internal pullback. So usually the purpose of a chalk is to like mitigate something more significant in the premium, the discount. So in this case, the chalk would probably be to mitigate maybe this supply. Obviously, we don't know what exactly it's going to mitigate, but so if you got the chalk and then, you know, mitigated this here, the 4 hour, and then obviously you might have your supply there, say hypothetically, then price might just blast through it, and you're sort of like, oh, we have the chalk, why can't I look for longs? But you have to understand that if you got the chalk and then can play the long into there, then yes, that makes sense. But once it hasn't mitigated that something significant before coming back, that's sort of what I'm most wary with chalks, if that makes sense.
Yeah. Okay. Thank you. I'm very much expecting FOMC to do a big buy up to then potentially sell back down. But
yeah, hopefully it gives us some clear direction because it's been a pretty slow day.
Yeah. Thank you very much for that. I appreciate that.
No problem. Thank you. Any other questions, or will I hand it over to Tomas?
I think no one has questions.
No problem.
Let me share the screen. Oh, you had to allow me.
That should be you now, mate.
That difficult problem.
Yeah. Is that it now?
Yeah, perfect. Okay, can you see the screen?
Yeah, perfect, mate.
Okay, so I basically will just make a Monday, Tuesday, Wednesday recap. Very slow week in terms of entries. There was a possible entry today during New York. I was away, but I just post on the market channel, so I will just going through with you together now. But it was basically just a simple pullback to the upside. Yeah, I didn't took any trades. There was any trades yet during London, so yeah. But basically going through the entire week price action. So on the daily time frame here, I know someone have asked about if you are bearish or bullish, like prices in the big complex range. So I personally would not try to focus too much here on what happens on the left. I would be more interested on this kind of price action because we are trading on the M1, majority of us, like 10, 20 or 30 pips move. Like I don't need to predict if price will take out these highs or this low. So it's basically more on this recent price action. But anyways, for me, the bearish, current bearish leg is this big one. Of course, we have the daily also internal break bullish, meaning that the pullback of this leg just starts after mitigating premium. We then where the chalk, I believe it was here. So basically a sign that possibly the lower low can be formed, but only, in my opinion, only on this leg. That was the most recent one internally goes. Okay, we have the indication that okay, possibly the low will get run, and this can be a little bit confusing if you are new. But again, remember that we have this internal boss bullish, so it's always the lowest point before the break. So the break happened here. Okay, so the lowest point is here. So yeah, this pullback to the downside, this leg can still hold. I appreciate it's quite confusing, so that's why I focus more on the recent price action. But yeah, just to continue. So after this internal boss bullish again, I mean internal of internal, this can mean a lot of stuff. Can mean that now we'll have alignment between this leg, or we put the bullish pullback after this break. Remember that what I said is internal. Right after this break, we're now putting the pullback instead of being this leg. Right, what I was talking about is more now about this leg, the push down, push up, and then push down. So yeah, this can be very confusing. So if you are new, just forget what I said, and yeah, just focus on this price action because it will be much more easier for you to understand, and we don't need to overcomplicate things. So if I go to the H4, okay, talk about H4. Since the beginning of the week, we are contained within this this bullish swing leg. Within this bullish swing leg, of course, we have internal legs. For example, like this one, that price went down and went up. At the beginning of the week, price completely disrupt this low that was internally, but it was very, very strong. Not only the extreme of the internal, we also have the sweep, right? It's at the discounts. We have some kind of inducement. You can see here on the H4, this is an inside bar. For me, it's like a range on lower time frames. So basically, we have inducement on this leg as well. So in this POI, was very, very high probability if price was going to the upside. And something that you want to take note is when we have, for example, this bullish leg, what I like to do in all legs basically is finding the most high probability POI. And when I see this high probability demand fail, of course, this can still mitigate and continue higher, but at least it's some kind of a confirmation that there is a potential that this low, even though it's strong and we expect them to continue, there is potentially that this will get run because the high probability POI, where the majority of the demand orders are sitting, just fail. Okay, so something that I like is pick the high probability POI and see how price react. The high probability POI within the leg. Okay, but start here Monday. Okay, price reached the extreme of this web inducement, so I was interested in looking for longs at this stage. So jump to M15. Let's continue on the M15. This was around Frankfurt Open. So I'll just mark here the M15 breakout structure. Where is M15? Okay, M15 and M15. So at this stage, okay, this is quite interesting because at this stage, I'm happy to play longs if we have M15 change of character, because I don't confirm 4-hour POIs within just M1. So I'll wait for an M15 change of character. However, you need to understand that we are still contained within this leg on M15. So this M15 shock bullish can be just put in the pullback, right, to mitigate something here and then continue down. So I'm happy to play the longs, but I'm still aware that price can sell from here. So I'm still interested. So when price, let's continue. Okay, so when price continue to the downside, okay, I'm not looking for buys yet, neither sells, because price is literally in the mitigated for demand and still in the discount of this M15 leg. So I'm not interested. And this is something that people can have fear of missing out. For example, I understand why this POI can get respected, especially when we have an M1 confirmation entry here and continue down. But this is when you have to have a solid trading plan and the criteria that you want to look, right? I know some of you don't look very much about premium versus discount, but I personally do. So for me, this POI is not something I want to play. Why? Because this in the discount price just mitigates the H4 extreme, the very extreme. There is no inducement, and we have equals here. So the price, you can see that here, price left like this kind of equalized. So there is no confluence, the positive confluence, in my opinion, to take this out. Even though M1 can form here, I'm personally not interested. And just let it go. And the price continued to the downside. Okay, and this is what happened in New York. You can check out. So the markups, what I was seeing at the moment is, okay, at this stage, you can see that H4, we can have a big sweep of external range liquidity. And a lot of the times when price swept these significant size of lows, we have a significant pullback. So once price sweep this liquidity, I personally not that kind of trader that just trades liquidity and take like a liquidity sweep, a retrace, and here we go for the 50 trade of the day. So I just focus on the high volatility stuff. So after this sweep, and I'm not on M1 or whatsoever, I wait again for an M15 change of character just to show me that price is pulling back. Because if you look to the M1, we have a lot of false signals and price can just continue to the downside. So I want to let structure dictate what will happen next. So at this stage, okay, we have this M15 change of character. This leg, this candle here was an inside bar. So I believe, to be honest, on DAX it is, on the one the provider it isn't, but on my broker fee and on Pepperstone, the provider it is. So yeah, if you trade DAX, you need to check different brokers and providers. I mean, so yeah, for me this is a change of character because it was an inside bar on other providers, and this for me indicates that now price was pulling back first in this most recent leg, and of course after this goes, I'm now talking about a pullback on this big leg. I was looking for a buy at this stage, but price just continued to the upside. Am I interested in taking a sell here? no, personally, I'm not interested. Of course, I will be if you have something like this. Why I will wait for this? Because at this stage, if you have something like that, what it means that you have something like this. Okay, so after this internal shift, I have the indication that this low is likely to get run. Okay, because this low never achieved anything, never took out this high. So when we have low probability supply and demand, even though technically it's valid because you can see it's pro trend and 15, I'm not interested because price just swept this external range liquidity, massive swap external range liquidity. You have this kind of trend line liquidity that price can continue higher, is at discounts. It's definitely not a high probability supply, in my opinion. And a lot of times when we have, for example, a break of structure and we have this first range usually can work as internal range liquidity to be work as inducement to mitigate something at premium to then continue down. So yeah, I'm not interested in this area unless we have a clean M15 change of character, shift in order flow. I'm more interested in taking longs. Okay, so there is no longs right at this stage. Price just continue higher, and this is a lesson now. I think it's good for you guys to pay attention in this one because I was looking for a long at this stage here, and why I'm not looking for longs. And this is a question pops up a lot from you students, and especially valid. Why I'm not interested in taking this long here, unless of course we have a decent, for example, M15 change of character. But I was much more convinced that this range was going to hold this demand range because at this stage, what I just said, we have this push up, push down, and if this range fails, okay, what do we have at this stage? If this range fails, we have alignment, bearish alignment. So this low is likely to get run because we have something like that. Okay, so this is why I personally not very confident in taking longs from here, or at least I will be much more conservative. And I will be interested in taking longs from here, continue the move to the upside, especially after you can see that this supply gets disrupted after this week. Okay, so all the orders have been disrupted, so clean the path for the demand to play out. So okay, I was on the M1 here. Let's continue. And price just continue to the upside. There is no trades for me at this stage. Yeah, no trades. Price just continue to the upside, and it was a quiet day. So coming back the next day, just let me put the London session next day. Okay, around this. Let's go to the H4 to analyze again. So basically, what do we have now? We have a sweep of this. H4 is still bullish, right? Because we never closed below. This is still bullish. We have this internal shift, right? But this for now, right? So for now, does not mean that price will take this high, and this high is weak. Because if you follow this order flow for me, we have the push up, push down, push up, push down. For me, this is one big leg, which means that yes, this is a very good indication that price can continue higher. But technically, this, and I appreciate if you didn't watch yet the advanced market structure videos, it will be quite difficult for you to understand, but just to get your mind thinking, because this is important. When you have this shift in order flow, right, you go from supply ranges to demand. Price was basically putting the bullish complex pullback of this major leg. It definitely can continue higher, and this is something I was predicting. I was looking for buys, but you also need to understand that price already reached the premium, mitigates something that, by the way, was not very clean here, and that can be enough. That can be enough to now follow the expectations of this major leg and going through this, don't respect this protected internal low and just continue down. How can we protect ourselves from this? So instead of looking for example, M1 straight away, we can understand that it's better to wait for example, M15 chalk bullish. At least it gives me more indication that price will continue higher, but I will go through on the lower time frames. This is the H1, nothing to add. Let's just update the M15 structure again here and here. Okay, so I believe according to my markups, I was looking to get long here. Why here? Because you can see that you have on H1 is even clear. You have this bullish leg, right? But on M15, you have this small bullish leg. So this low based on M15 is protected. We have a sweep, right? Price swap liquidity. We have some kind of inducement here. So I was, and also of course is at the discount of this leg. So I was happy to play longs from here, especially with the liquidity to touch it, but quite frustrating. I think price never gave entry. Let me see. Yes. So if I go back to M1, it was again, price tapped into the zone and there was no entry. So again, jump back to M15, no entry for me, but you can see that price never closed above. So basically the structure on M15 was still intact. So let me just put here a sweep of liquidity because I was still looking for longs at this stage. But something that I was aware and I put on the markups or analysis channel, yeah, is that we have this bullish leg, right? This big bullish leg on H1. And I do understand that M15 can turn bearish just to facilitate some pullback at the discount of this H1, right? Bullish leg. So I would be still interested if price reach here and forms an M15 change of character. I personally will not be looking for M1 straight away because M15 and order flow at this stage would be bearish because M15 would pulse bearish, order flow bearish, right? So I will not be looking at M1 straight away. I'll wait for M15 change of character. But yeah, I was also interested in taking moves from here, but I was also interested to taking buys from this demand yet because price just barely tapped. So maybe this can be used as inducement, price continue down and continue to the upside. So when price went down, it just completely disrupted. So I was no more interested in taking longs from this demand. Yeah, and you can see price swap boss bearish here on M15, and there is no way I will be looking for sells before the M15 choke. So yeah, the only way for me to look for sells is basically now. And at this stage, if you go back to the H4, what I just said, I was saying that I will be looking for buys because I do understand that this bullish pullback can continue of this bearish leg, right? Or because price reached the premium, this can be enough and price can continue down. So, and this is perfectly fine. Sometimes you'll have both longs and short ideas, and that's why I say to don't predict, just react, because I will not predict if I will be looking for longs here, because price can go up and I will be taking sells, because I do understand that, for example, price never mitigate anything significant on the left. We have still unmitigated demand that price can reach. So after a pullback, M15 is bearish, so this is protected, this is weak. I'll be looking for sells, but I will also be interested if price goes down and give an M15 change of character to play the pullback, because this can fall through. But unfortunately, there was no trades. You can see that there were no bullish M15 choke, and there was no trade. Here is around, you can see after New York. So it's the end of New York. I don't trade in these hours. So price end up trickling down. And again, no trades, but you can see that there was a price taps here. I have no opportunities, and price taps here in this demand and no opportunities. This can be quite frustrating, but you just need to understand that that's the nature of trading, right? So next day, that is today. Let's continue. Let's go to H1 to be quick. Let me see. Yeah. So at this stage, we already passed below this H4. H4, I believe, is not officially bearish because price never closed below, but I do understand that most likely it will become. So I would not be looking to take any longs again from here unless I have a clean M15 confirmation, structure confirmation. So let's just focus now on today's price action. I'll adapt here the order flow on H4 because we are moving down, right? Price went up, swept this liquidity and continued down. So I will just focus on this recent price action now. You can see on H1 is even clear. I personally like to use H1. I know it's not a lot of you do use it, but for me it's clean. Okay, so going to London, something that I think it's important to understand is price was around here. That is, just adjust this. Let's delete to be everything clear. Yeah, it's fine, and this one as well. Okay, so coming to London, I do understand that you have this H1, right? M15, the most recent one. First thing first is where price is at the moment. You can clearly see that if you use, for example, a simple premium versus discount, we are in the discount way. So straight away, I will be more conservative if I'm looking for sales, because not only we are on the discount, we also have all this liquidity here. We have also hyperliquidity POIs above. This one, that's a very extreme. And yeah, price just swept this major external range liquidity. It also, you can see on H4, swept this again. So on H4, it almost seems that you can clearly see that price will push up. M15 will post bullish, which means now the pullback, right, of this bearish leg will start. Okay, price probably mitigate something here and continue down. But at this stage, you can see, of course, it's not 100% sure, but based on H4, do you want to sell from here? I personally not, regardless what happened, because what I just said, the major sweep, super discount prices, order flow on H4 is bearish. Again, even on this leg is very discount, but it's not a very clean price action. This is not a typical winning trade looks like, in my opinion. So regardless what happened here, I personally not looking for sales, and if it goes, it goes. So yeah, price went to the downside. There was no M1 entry according to my trading plan anyway. But you can see that the reason why I'm not interested, because after price went to the downside, what happened? Price straight away moved to the upside. So I personally prefer to stay away of these trades because first, it's quite messy on the lower time frames and is basically just playing a small range. I prefer the more like day trading stuff, which means price puts pull back to premium, chalk, right? You take the trade and then you can target lower TPs. You can enter with a bigger stop loss, have more room, right? Price can develop much more than, for example, this, because price can, like it did, swept the low and retrace straight away. So at this stage, price swap again, chalk bullish again. After the sweep, let's just reinforce this idea, because a lot of people are taking sweeps of liquidity, and I personally don't use them, but in this way. So basically, after this sweep, right, and price failed to close below, I will not look to M1, right? I will not take M1 and look for a possible Y, because personally for me it doesn't work. You can see that, yeah, it would be a loss. So when you have this kind of sweeps and inducements that interrupt, etc. I personally wait for the confirmation, so M15 change of character, because it gives me confirmation that the pullback will actually happen. So yeah, after this M15 change of character, I mark this demand, but price never came back. Price just went to the upside. You can see that it never came back here. So unfortunately, I couldn't get involved on the move. By the way, I will not, I think I don't need to explain again, but I'm not looking for sells here. Even here, to be honest, even though it's the very extreme of the M15 leg, even here, I personally, I'm not a big fan. I personally prefer to wait for an M15 change of character, just because what I said, if I go to the H4, you can see that I don't want to sell in this area. It's very, very low in delay after major sweeps. So when we are not sure, there's nothing wrong. Just wait for more confirmation, okay? The trade that plays out during New York was this one, because I mark as well on the photo analysis. After this internal M15 post bullish, let me just explain. Okay, so you have this M15, right? This M15, this price never closed below. Okay, so this is the leg, this M15, and you have this internal post bullish, which means that the pullback of this leg is officially starting. But I'm playing the bullish momentum, not just to this supply, because I do understand that it's very likely that this, for example, can work as an inducement and price can keep going up to reach premium prices. Okay, so I was looking for a buy here. So let me explain. It was this demand. Let's just, okay, it was this demand here. It swept liquidity. You can clearly see this range gets swept. So I'll just put something like this. I have, of course, other demands marked on. I have this one, for example, and the extreme. So yeah. So when price went down here, you can go to them one. And this is quite annoying. At first, I personally was not in the computer because it was during New York, and yeah, I was having lunch outside. So yeah, I was not at the office, but you can clearly see what happened here. You had the shock up, price, people take long here, gets smashed. So liquidation for me was clean. Price reacting to supply. There is no sweep of liquidity. Price just continue up. So what it means that I will take the extreme. The tricky part here is that it just eliminate this one. The tricky part here is because price, the zone is quite large, right? And here price at this stage, let me just price. Okay, here you can see. I personally was not on the computer again, but it should be quite tricky, I think, in my opinion, because when the liquidation, right, the fake shock, price push down, push up, never sweep. So this works as inducement to extreme. The entry model is mechanical as it gets. We have liquidity to touch it here, buy side liquidity. However, the problem is that first, the zone is quite large, okay? And second, on the Pepperstone, let me see if I can, yeah, here on Pepperstone. I actually can see here is not Pepperstone. I use all providers because only on Awanda, price actually tap. So for example, on this one, you can see that price never tap. On my broker, it never tap as well. But let me see. On you can see as well on Pepperstone, price never tapped here. So it was a decision that, in my opinion, is quite discretion because on Awanda it tapped, on the others it didn't. I usually, when I'm not sure, I go to my broker to check, and my broker also never tapped here. But based on Awanda, you can see the entry model works perfect. You will enter with a 15 ticks stop loss, 1 to 5. Yeah, for me it works very well. And of course, it will depend how you manage this trade, because if you move to break even, yeah, in this one it didn't hurt, but I don't know, it was very close. And I think, let me just continue. I think it price just yeah. So it would be the 5R, okay? It was explained as well on the photo analysis channel. The only tricky part, I do understand people can miss this trade again, is because you can see on Pepperstone price never tap, and yeah, sometimes can be difficult for you to see. On my broker, it didn't tap as well. And yeah, that was the analysis for DAX. So in my opinion, only one trade this week. That should be this one. And it was a winner with 5R. And yeah, the reason I didn't take because I was away, and yeah, forecast on auto analysis. Do you guys have any questions since the beginning of the week? Like anything, just let me know. You guys don't have any questions?
Hello.
Hello.
Hi, how are you?
Hi, how are you?
Good, thank you. How are you?
Fine, thank you.
So I think I sent a message in the questions channel sometime last week asking if there was going to be a backtesting series using advanced market structure. And then you mentioned that you'd recorded a video, something, well, based on how you trade. And so I was wondering when we're going to have access to that video.
I personally did a video about backtesting and already sent to March. Probably will be uploaded. I think I sent it last week, but he also reformulating or making again the market structure series, because it was yeah, now we evolve and improve some stuff. So he's making a new section on market structure, and I believe he wants to put that video in the end of the set of the categories of market structure videos. So I think basically just finishing that material first, and then when he will release, I think he will release everything together, because yeah, I already made that video, and yeah, probably just need to be uploaded to the website. But yeah, I think you guys will benefit. So any feedback, by the way, is welcome.
Yeah, no, I think for me, I've learned from watching every other video, right? But I think the two videos that were the biggest for me was watching the soft for FX backtest and then the art of trading. I think so they dive so much into the thought process of like planning your trades and executing them versus, you know, every other theory video that is discussing how to use, I guess, all the tools, be it's supply and demand or advanced order flow. So
yeah, on the but by the way, on the video that I still will make a new one in terms of backtesting. Is basically two videos. I was mainly focusing on how to collect the data and how I do approach backtesting in general. I was not mainly going through bar by bar like a lesson. I'm not sure if that was you looking for, but
yeah, that too. To be fair, because I think I was watching one of your videos, I don't remember which one, and then you were showing, I think it was the entries one, the trade entries workshop, and then you were showing your journal, and then so you were just scrolling through the journal, and then the first question that I had was that, of course, when you understand how to do this, then it's easy it's not easy, it takes a lot of time to gather the data, but then it's a question of how exactly do I start going about that process, and how detailed do I have to make it be so that it's beneficial to me when I reference it at a future point in time.
Yeah, so basically on the video that the second video I will make is and will make this week is basically showing the journal and how you can collect data, etc. But what you are asking is mainly going bar by bar, right? Like an exercise, like together, and
so both of them really. So the bar by bar, I guess, is good for back testing. right? So like the thought process of like just the analysis that you just did now, which is done, I guess, every week. Essentially you dive into that week's price action and you sort of like try to break it down into what you would look for when you're getting into a trade. And then what, I guess, were the conditions for you to take certain trades or skip taking certain trades. And so that's good. I think we get that a fair amount. But then when it comes to back testing, so currently we have the one video, which is the soft for FX back test. So that was done based on the old market structure.
Yeah,
so,
M15.
Yeah, the M15. And then but then now market structure has evolved to where we have internal structure, right? And we're no longer just looking at chalks as ways to say that price action is going to reverse. Now we have chalks as, price could chalk to just go and mitigate something above and then continue moving down or up, right?
So basically just writing down here the notes to improve. You are asking for example, it can be another soft FX video with the current advanced structure analysis, right?
Yes.
And yeah, basically the same exercise, like 1 hour of price action and going together, etc., like we did back then, right?
Yes.
Okay. I just writing here the annotation, so I will speak with Matt and come up with the idea to do that. So thank you for the feedback.
No problem. Thank you.
Thank you, Matt. Will you trade FA today? No. How to analyze and dig through your data would also be a great video idea. Yes, that's for me the video. I record the first video about the process that I did until now, and the process, in my opinion, to you to reach a consistency in the market, and not also reach, but maintain that and improve, because we all can have a positive month, right? The goal is to always improve. So I basically just was completely honest and write down and went through all the process that I did and I currently do. So you can take, in my opinion, that's super valuable. Regardless where you'll be in like 3 years, you always can take notes of those process and implement yourself, and regardless of the strategy you trade in the future, etc. So for me, that's a key video. And the second one is about what you just asked about, analyze and dig through your data. So yeah, that's something that I have written down and will make this week, but of course I'm not sure when it will be uploaded to the website that is with Matt. So yeah, I would very much like to see something like that. Okay, I already take notes about that. So.
Any other questions, guys? General questions or? Yeah, Anthony, we don't really trade news. The risk of slippage is just too much. It's like we just don't trade in the news. It's not our edge. It's not our style. It can be done. Like I'm sure people do it, but personally, we just sit and watch and see how it plays out, and then sort of reevaluate things when spreads, etc., have settled down tomorrow morning coming into London. That's how we approach it.
Yeah. Okay, guys, if you don't have any questions, I think we can finish the session and will be uploaded, so you guys can watch specific parts if you want.
Yeah, thanks very much for your time, guys. Thanks for tuning in.
Yeah.
Hopefully,
thank you, guys.
Some value from it.
And see you on Discord.
Yeah, I'll chat to you soon, guys. Goodbye.
Bye.